So 5 minutes up to 12, I can still say good morning. I'm very happy to be here. First of all, I would like to congratulate the two special ladies, Ms. Ruxanda Avram, our oversight director, and Ms. Daniela Crăciun as well, for filling the hall, filling the agenda of the meeting, filling also my table is amazing. Previously, there were only 4 seats with relaxed people. Our meeting, we should share mics, we should stay like this, but I'm happy to have these colleagues sharing ideas with you. First of all, my name is Dan Costinițescu. I'm senior advisor to the governor. I'm also a professor within finance and banking faculty, Bucharest University of Economic Studies. I'm happy to chair this session. I will invite each and everyone to say a few words about his role in the specific organization and about the organization very briefly. Please, you have this opportunity.
Hi, hello, nice meeting you all. Glad to be here. So I'm Alexandru Biță from Libra Internet Bank. I'm Chief Technology Innovation Officer, and I'm currently involved in all related, technology-related and digital-related projects within Libra. Happy to develop further.
Thank you very much, Alex, and welcome. Sabine, please.
Hello, everybody. I'm also very happy to be here. I come from the technology side of the house. I lead the hybrid cloud services delivery organization in IBM. So I have around 6,800 people in 24 countries. And most of our clients, I would say they are related to the banking and financial sector. So I guess this is a good reason to be here.
Thank you, Sabine. Philip?
So my name is Filip Mutafis. I'm running the operations of Paysera in Bulgaria and Romania. It's actually our first event, more official here in Romania. Happy to join the discussion.
Thank you, Philip, for coming and for contributing. Didier, je vous en prie.
Merci. Good afternoon. Didier Lepotre, CFO at Infineo. Infineo, I would describe, is basically a neo-bank and a crypto exchange, where we basically bring the best of both worlds. So I have a background in risk management, investment banking, and corporate finance, and basically my role is to help the company, the startup, to take off later this year and to develop it into a great company.
Thank you, Didier. Diederik?
Yes, Diederik Brugging, Head of Payments, Digital Finance and Innovation at ESBG, which is the European Savings and Retail Banking Group, which is a trade association of savings and retail banks. Together we serve 163 million European citizens, so quite a significant association. And within there I'm responsible for all type of payment-related methods, notably lobbying, part of various expert groups of the Commission and the Central Bank, so quite well positioned, I think, to also share the view on payments. And thanks for the National Bank of Romania for inviting me and having me here. I'm looking forward to the debate.
Thank you. Alexandru, last but not the least, please.
Good afternoon. Happy to be here. I'm Alexandru Cociu, co-founder of Smart FinTech. I'm a tech person as a background, and as a hobby, I'm risk and compliance officer. I do screening these days.
Super. A few comments before starting to discuss, to debate the topics of the panel. First of all, being in the central bank head office is my duty, let's say, to recall. In 2008, the key point were the deposit, the savings. We managed to anchor and to preserve financial stability, to develop new roles for specific institutions, as well as to invent new institutions. Within the pandemic crisis, technology, payments, various payment solutions were the stars. With the help of the technology, we managed to pass via the pandemic crisis. The economy was functioning, the clients were having money to access their funds and to continue to keep jobs and service the economy. So basically, we do have this table as well, deposit, savings. We do have as well technology. We would like to mix them in order to create value and share different views. I have the privilege to to act as a commercial banker before 2008 and to act as a central banker after this. In this respect, I prefer not to say digital versus traditional. I prefer to say digital plus traditional. It's complementarity, it's value added for all the customers at the end of the day. And coming back to the panel, we have here various business models. I invite you to touch as well the variety of business models in accordance with risk management, in accordance with diversifications of risks, so on and so forth. In order to start, we'll have a tour de table. Please, from your perspective, Alex, what do you think are the top 3 opportunities and top 3 challenges within this specific context of May 2023 in order to look forward to be better equipped for the future?
Thank you for the question. So I think that there are a lot of opportunities, and depending on your current position and current strategy, some opportunities may appear more appealing than others. I will try, though, to provide an answer from a technology angle, emphasizing a bit on the business as well. Somehow, given the fact that no matter what's your current position or strategy, fundamentally, what it really is important is the technology. So I would say that in order to deliver good services, you would need 3 things. Good technology, which should be easy to integrate, good internal know-how, and a mentality to ship. Let me provide you an example. So, for example, in 2015, in order to start a new card program, perhaps you would need 1 year, a bit more. Currently, there are financial institutions that do this in perhaps 8 weeks. How they do it? Obviously, technology enables that. And in the first 2 panels, it was discussed a lot about technology, obviously, about innovation as well. Today, innovation, in May 2023, innovation is not really about inventing from scratch new things, but actually to put together in a different manner existing services, but in such a way that you would deliver additional value to your end customers. So in order to provide a few examples of, let's say, challenges, I would say that we see in the, let's say, fintechs and neobanks that they are able to deliver in 8 weeks such a, let's say, new proposal for their customers. But we don't see that often that banks manage to do this. So it could be a struggle in the technology stack, could be a struggle with the internal know-how, could be a thing related to the culture as well. That's why I was mentioning that you need these 3 things. Nevertheless, to develop a little bit further, how do these financial institutions manage to do this? Because they innovate, as I said, by putting together, like Lego bricks, various services which are provided as a service. They bundle those services together and they deploy it. The rollout, the go-to-market time is quite quick. So I would say that a big opportunity for banks as well is to make steps to penetrate a bit the embedded finance opportunity. And that would mean to provide banking as a services, or perhaps a pass, to have a pass offering. That would be one key opportunity, at least from my standpoint. A second one, and thinking what Greta said in the first panel, she said at some point that instant payments should be free. I agree. And I think that the market expects that. So I would say that an opportunity for banks here is to find innovative ways in which to manage the decline in FX, if we think of cross-border payments, for example, and wire fees. So you have to be quite innovative about it. I can develop even further, but I'd like to give the opportunity for the others as well.
Thank you very much, Alexandru. Libra managed to move on and make the best of this opportunity. Thank you. Sabine, please. The same question.
Thank you for setting the context, and I think it's good because we work a lot for this industry. And I would like to start with an analogy, what we do as a technology company for the banking and financial sector. So we see it as fishing, you know. When you go fishing, you can go surface fishing and you can get the easy prey, you can get the small fishes, and this is where you use IT services, IT projects for quick wins, like improving your employee productivity, like automating your call center, like your improving, optimizing your systems of records, and so on. And it's fine to do that, and a lot of clients are doing that. But then if you want to catch the big fish, you have to go deeper. You have to go deeper in the ocean. You need more complex tools. You need to change your mindset when you think about technology. And to be a bit more specific, what we mean with this deep fishing, because this is my area specifically. What we think it's extremely important for clients, and especially in the finance sector, to have a technology platform that allows them to innovate quickly and to deal with this constant changing market, right? You have war, you have interest rates, you have inflation, so it's a very, very, very complex market. And for us, obviously, the platform is based on cloud, and we had this conversation for many years with banks about cloud, and even from the beginning of this discussion, we had clients like 20 years ago saying, no, this is never going to work with financial institutions. There is compliance, there is security, so you go sell cloud to your retailers, to coffee shops, and to others, we stay. But then, in all these years, we had so many conversations, what do you actually understand by cloud? And it's striking that the understanding is completely different from different people. And at the beginning, it was like, oh, so I have to put my data in a shared environment with other clients, and I have to lose control of my data, and it will just allow me to save some costs. And that mentality has changed a lot. And in the last discussions that we had, I think a lot of people understood that cloud is something completely different. It is mostly, so if we have like a common denominator, it's about automation and about being able to do the same things that you did in your legacy environments at a higher speed, and that gives you the opportunity to use your most valuable resource more efficiently. And your most valuable resource, I think we all agree, in the finance and in the IT industry, are the people. So I think this is the main message that I want to share here, is that for all the other discussions about business innovation, about technology innovation, creating new business models, being agile in the market, first of all, you need a good, solid platform, technology platform.
Super. Thank you very much. Thank you very much, Sabine. Philip, please.
I want to tell you a story. So it's 2012, and Paysera took one of the first licenses for electronic money institutions in Lithuania. And the first thing that they came up with was to do remote identification via Skype, which at that time was a huge innovation. So next thing that happened was they got a fine from the central bank. After that, one of the things that Paysera started was basically doing open banking before the era of open banking. How? By scraping the web services of the banks. There was a legal case. We finally won the case, and later, after the open banking, the PSD2 came. So my point is that technology is important, but the technology is here. Technology is available. What is needed is a more tight embrace from the regulator and from the public to embrace this technology so that it is made useful for people. And useful means more convenient, cheaper for sure. And last, I want to thank the fact that the central bank is hosting this event is really important and sets the tone. And this is how it should be. Believe me, this is not the practice in other places. Of course, maybe in other countries it's more advanced. For example, in Lithuania, I know for sure it's a little bit more ahead with help not only from the central bank, but with the prime minister being directly engaged into wanting Lithuania to become the fintech capital of Europe, and the mayor and the governor of the central bank and so on. But on the other side, for example, now we operate mostly, I'm responsible for the operations mostly in Bulgaria and in Romania as an investor. In Bulgaria, things are not as good as we want to. We are really happy to see that there is such event hosted by central bank, and innovation and fintech is being talked about.
Thank you very much, Philip. So the main takeaway, was it the fine from the central bank or? No. The main takeaway, I think, is sharing experience, going on, having this conversation. I thank you again to my colleagues for putting this in and allowing the industry to come and share experience and ideas. And I'm also positive about the future. The Central Bank of Romania, by the way, in 2008 was among the only 5 central banks in Europe ensuring the well-functioning of the industry. We didn't manage to pay any public funds to save banks, so we're not very quick, but we're very concrete and firm and diligent in what we are doing. Thank you for your message. Going on to Didier. Didier, please share us some opportunities, challenges that you consider are fit to be shared with the guests here. Thank you.
As the first speaker said, I think opportunities and challenges depend very much where you're sitting in this whole equation. So if you are, a fintech entrepreneur and you know everybody has a mobile phone, technology is developing very, very quickly while you think you can, take over the world, and become a huge financial institution. So on the other side, if you are, let's say, a traditional bank, I also don't like the traditional bank, what is traditional plus digital, I am sure you are watching very closely at what is happening. And from my perspective, I think after reading a study that said that basically 90% of the useful information about customers are information about their payment behavior, the question is who owns the customer? So I believe that whoever owns the customer or gets the customer engaged with payment services is able to understand the customer and be able to provide, higher value services. And I think this is, in my opinion, the biggest challenge for fintech companies, because in fintech you have fin-tech. I think the tech is there. The fin sometimes is not totally there. So I think the challenge for the fintech industry is to start thinking in terms of, added value products for their customers. As somebody mentioned before, payments basically are free. Many neobanks are providing so many products for free. But at the end of the day, whoever will survive and thrive will be companies that know how to deliver relevant, safe, and money-making products to their customers. So I think it's a big challenge for the fintech industry. And of course, as we've talked many, many times, a challenge this time for the regulators is to try not to be too far behind, and hopefully, to keep up, with the, innovations. We're very happy at Infineo to see that the European Parliament, passed the MiCA regulation. We think that although some parts of it may, impose some strict constraints on the market players, in the end, it's going to be for everybody's benefit, the customer in particular, but also for the players. I think we can go on.
That's it? No challenges?
Challenges?
Yeah. Any challenge?
Yes, I think a challenge, talking again from the perspective of fintech company, I think is to, to get, in a way, legitimacy, to get the trust of the customers. Mm-hmm. I would say banks, generally speaking, receive the trust a priori from their customers. I think, fintech companies and more disruptive, business models need to earn this trust. So this is why I think we are, generally speaking, very interested in promoting regulation, to collaborate in order to have regulation which is, sets a clear playing field. And yeah, that's it.
Thank you very much, Didier. Very good point. It goes very well with our next guest because representing the European Savings and Retail Banking Group, it means savers, depositors, it means funds, it means stability, but of course, now we can see embracing technology as well, and Didier will tell us how is it going on with the traditional way of doing banking. Please.
Yes, and indeed, and there's nothing wrong with the traditional way of banking. I think, in fact, banks, saving banks, have been combining finance and technology, so hence preaching fintech since its inception, because they have constantly been at the forefront of developments in inventing new products that are tailored to their customer needs and that fulfill certain requirements. So far so good, and indeed, especially with my constituencies, which is savings and retail banks, we take it very seriously, and we share the 3 R's as a value: retail, regional, and responsible. So we're always close to the consumers. We take a responsible role. Usually, the last branch, if it closes in town, is usually savings banks before the other banks left. But we also play a very fundamental role in financing the economy. Most of the mortgages and consumer loans are provided by savings banks. And so far so good, I would say. The bankers in the room, the commercial bankers, might know the old joke about banking, the 1, 2, 3 rule. You take deposits from the consumers at 1%, you lend it out to the others at 2%, and at 3 p.m. you're at the golf course with the other bankers from the community. But jokes aside, that model is still functioning. Of course, we saw now possible threats by, for example, the possible introduction of a digital euro, which could hamper the deposit-taking capabilities of our banks. And if it hampers our deposit-taking capabilities, it could also hamper our abilities to finance the economy. So there we are a bit between a rock and a hard stone. But also looking at the so-called threats or opportunity that are being erosion by other pieces of regulation. We believe innovation should always be market-driven, fulfilling certain needs, and not necessarily being pushed or imposed upon you by regulation and what have you. And if you looked at some of the new actors on the ground, I think PSD2, it was a bit of a two-edged sword. It was good that certain practices were stopped, because then there were some fintechs that would use the technology called screen scraping and basically take any data they could get hold of from consumers by impersonating consumers, logging on their behalf and engage with the bank as if they were consumers initiating payments and what have you. Nowadays, and the same with account information services, so it's good that it's being regulated. I think the way it was being regulated was not the best blueprint for something that we can see evolving into something like an open payments, open banking, open finance, or open everything, because the PSD2 was very, very one-sided, very unleveled, because all the burden was put upon the banks. They had to invest in additional security, in additional IT infrastructures in the form of APIs. They had to apply data filtering to make sure that fintechs could only access those pieces of data that were allowed to access, whilst there was no remuneration inside. It's a repeating theme, and I also heard it here around the table in the previous panel. Banks need to provide services for free. At the end of the day, nobody can make a living by providing services for free. Even fintechs cannot do it. And although some of the business models of the fintechs are just around burning shareholder money, okay, yeah, interesting business model. If we as a bank start to offer services for free and burning shareholder money, I think within 2 or 3 days the national competent authorities will start spanking our on the head and tell us to do otherwise. So I think whatever is being going on in innovation, we have here change, value change, or end-to-end change where all players have a role, and maybe fintechs can fit in there well, banks can fit in there as well, consumers are in there, merchant and what have you, but there should be a fair value sharing, a fair sharing of the risks, it should be based on mutual benefits, and only then it will fly. As an example, as I think open payments, AI services, didn't fly well because there's no clear business case for all involved. In fact, I think the number of account information service providers is declining rather than increasing over the past years. So from that point of view, it's good to see that market participants are coming together, for example, in the work of the SEPA payment account access scheme, which is an initiative where both banks and fintechs and other stakeholders are discussing together under what conditions can, let's say, premium services on top of PSD2 be performed. And maybe as a last point, just to see it, if you look at the whole bigger scheme in payments, in Europe we make together 144 billion cashless transactions year over year in 2021, which is showing an 8.6% growth rate. And 52% of them are made with cards, 73 billion transactions, and that's even growing with 11.6% growth rates. And one of the key reasons there is that's because there's a sound and solid underlying business model. And what we as consumer banks usually have as problem is that the consumers typically don't want to pay for the privilege of being able to pay, whilst on the other hand, merchants or commercials are willing to pay a little bit, of course, not too much, for the privilege of being paid, which is then good news for the bank that holds a relationship with the merchant, because they can take a fee, but bad news for the bank of the consumers because they can take a fee. But in the cards business, that has been solved by a so-called interchange fee, balancing payment mechanisms that give some flow from the bank of the merchant to the bank of the consumer. Everybody happy, consumers love to pay with cards, it's very efficient, contactless payments have spurred under the pandemic, limits have been increased. Merchants love it to a certain extent because all people in the street have a card and are able to pay with it, and banks love it because it has a sound business model. So the key message here, without a proper business model, things won't fly. I will leave it here, thanks, done.
Thank you very much, Diederik. I think the main takeaway, a bank should preserve the savings, should preserve the deposits of the clientele, and of course should deal with a new context, managing risks and trying to be in good shape to keep up with the young customers, with the main trends. Going back basically to the fintechs, we expect some smart comments from Alex. Please, Alex, go on.
I will start with challenges first, so to finish
Please.
on a good note. As a bit of background, Smart FinTech only does business in the open banking space. So we do payments and we do account interrogations. So I will limit my comments only around the open banking. And I will try to limit as well as for the local market where this is our home market and we tend to believe we know a lot, right? So we are always discussing everywhere. Open banking is a hot topic, right? Even in this room, we are always discussing about open banking, what's open banking doing. But the question is how many of us in this room have at least once tried to do any service in open banking, at least a payment or one account interrogation. I think I'm doing it. I'm quite happy, but I think I could be alone here. So that's the challenge, right? The adoption is not there, right? And I can ask the question, does anyone did, and you can raise a hand if someone of you have done at least one transaction using open banking. Well, quite a few. Yeah, quite a few.
So good surprise for you.
Good surprise.
This is an opportunity.
Yeah. If you go beyond these walls, the traction is way less, right? Mm-hmm. And the adoption is not there. And that's the huge challenge that we are having at Smart FinTech now, is to first convince the public that this is an innovative new opportunity to do payments, a new way of doing payments, which is more secure, more direct, and less parties involved. So that's what we're doing, and I think that is we need more support here, right? And I'm not looking at regulators, because now the law is quite good, the foundation is there. We just need banks as well onboarded on this, and that's my second challenge, is that the pace that we are moving is not the same. So we are young, we tend to be fast, we need services over the night. But because we are delivering only open banking services, our foundation is our banks, basically, so we need them onboarded as well. And here I think there is not enough motivation for them, right? Hopefully PSD3 and Open Finance will tackle this challenge, how we can all profit of it, so we can get them onboarded, get them motivated. I'm always talking to them, we should not wait for PSD3 or Open Finance. We can do now, right? The security is there, the APIs are already open. Why not delivering some new and better services over this infrastructure? Why not monetize now? The demand from the market is there. I can guarantee that. I'm going to the banks with real use cases where we need new services. We just need more tractions. And I'm not talking, there are some neobanks and new banks, small banks that are really good on innovating and delivering this type of services, but to have a mass adoptions, we need to have it more general. In terms of opportunities, I think it's quite obvious. We are always discussing about open banking. This is a green field. The opportunity is there. It's a new way to do payments. It's a very first step to have embedded finance, right? The end user now has an opportunity to interact with the bank directly in the application where the need emerges, right? So for example, if you are in an ERP application, you can start paying your clients directly there. You don't need to switch to a bank app. You don't need to upload a file, for example. That's history. Now you can do it digitally, fully automated, so the opportunity is there. For the banks, it's a new channel of growth in the future. For us, it's a completely new field, so we are trying to profit now. And for the end user, it's a new experience which is more direct, more where the need is. And I think that's the future, for sure.
Thank you very much, Alex. Thank you to all of you for sharing ideas and having this complementarity. Allow me to address my second question to do as well a tour de table. Technology, innovation, regulatory, supervisory environment were transforming the client relationship totally. In this respect, what do you think are the main drivers in order to ensure value added for all the stakeholders, so collective approach, but to maintain as well competitive advantage for each player, to improve customer relationship and experience for each player, and of course to protect the customers, which will support the also the financial stability and all our objectives here in the central bank. Thank you very much. Alex, you have the floor.
Thank you. I think earlier Philip said that technology is already here, and Alex just said that there is a slow adoption. I agree with both of them. So technology is here, it's just not evenly distributed, or to put it in other words, is not evenly adapted. And to come back to your question, in the banking industry, the relationship with the customer has changed, is changing, and is going to continue to change a lot more. And I would say that the main drivers for this continuous shift are, firstly, as a true underlying fundamental vector for change is technology, which is an enabler. Secondly, I would say that the ever-growing expectations of customers are also a vector for change. And third, I would say the regulation in itself. So obviously there is a delay between technology and regulation, and that's normal. But with, for example, new regulatory sandboxes, I think the regulators are better prepared to understand the new business models that arise when you harness new technology. So banks, for example, have not been disintermediated by open banking, as some may have feared, but fintechs and neobanks did take a material share in high growth segments as payments. And yes, many of them started with payments, with free offerings, but I guess that currently most of them, they are on the route of getting profitable. So take into account that by 2030, the revenues for fintechs will grow to $1.5 trillion, which is a six-fold increase from the current moment. I would say that banks need to play more on the offense. And Didier mentioned earlier, who owns the customer? In my opinion, this is a key question, because if you as a bank, you still want to own the customer, then you have to upper your game. And what I want to say by that is not only providing services within your own interfaces that you own, like the mobile banking application, the internet banking portal, I don't know, a wallet or whatever, and to provide services to respond to questions such as what and when to deliver to your customers, you have to add something new, like where your customer is. Not only what the customer wants, not only when the customer wants, but where the customer wants. And this basically means to be present via embedded banking, and Alex very well emphasized the idea of harnessing embedding services. And I recall that in the second panel, it was mentioned as well about retailers who would like to provide embedded services, payment services to their customers. So yeah, I think that there is a lot that can be done here in order to keep ownership of your customer and be present with your services wherever that customer has, I don't know what journey, and not only to look through your own applications, and so forth. Thank you so much.
Thank you, Alex. Again, geography and ownership in banking. Banking is no more a place you go, is what you do. I fully agree with you. It's a very complex question. I think we should debate further on to reach an answer. Sabine, please, coming back to the collective approach, value added for all the stakeholders, and individual approach, competitive advantage, customer experience and relationships, as well as protecting customers. What's your view on this, please?
Thank you, and I think we all wrote down Didier's question, who owns the customer, so it's on the top of the list.
Please.
So I would actually add another important question is here, who owns the data? Who owns your data? And in the financial industry, in the banking industry, we typically say that core data is extremely well protected. And by core data, we mean the financial transactions, the account balances and all that typically sits on some mainframe computer in a basement, and it's typically extremely secure. But there is a lot more data around that. Like, for example, how many clients have downloaded your mobile application? How much time do they spend on that application? Or in, things that are happening around the house. How many lights, smart lights do you have on at the same time? Or which type of traffic are you generating? So there is a huge, huge amount of data. And in the last years, we have seen a struggle between companies to extract value from that data, and who owns the data has also a chance to get value exactly as who owns the client. And this is extremely, extremely important in the context of AI, because now everybody's talking about AI. But here, the ownership of the data becomes even more important. And we have seen cases like companies trying to use AI to generate code and saying, yeah, okay, we can create an application just by asking ChatGPT or another large language model. But by doing so, they have actually given corporate data, important corporate data about their products and their services to the public model. And the owner of the model has that, and potentially competitors have that. So just by asking questions, they are actually feeding their private data into the model. And people have figured it out. In a lot of companies, there are now policies. You're not supposed to go to a public model and ask anything. Right. It's forbidden. Then the second thing about AI and safety is like who developed the models behind it, and are these models transparent? So in a lot of these implementations, these models are not transparent. We know they work, but they are not transparent in the way the decisions are taken. And last but not least, it's about ethics and regulations. Are these models following all the regulations? Are they taking ethical decisions? Well, that's very hard to know with the public model. So here it is very important, especially in this industry, who you're partnering with. And we have a concept which is called enterprise-grade IT, where we supply the services, we supply the technology, but we are extremely, extremely clear that only the client is owning the data. And even in the area of AI, all the AI products that we have launched, and we have to say a bit slower than others, we did that because we wanted them to be enterprise grade, and the client needs to keep their data. And I will finish with one sentence which was around since the era of social networking, and it says, if you do not pay for a service and you put your data there, then if you do not pay for a product and you put your data there, you are the product. Thank you.
Thank you, Sabine. Please. So I asked a question, and there are coming questions from everybody, but very good questions. I will fill it a paper to debate it after the panel. Philip, please, your view on this. Either to answer questions or to ask more questions. You decide. Thank you.
I had a discussion with a friend who are actually in a satellite company, and they have very sophisticated formulas in their source code to calculate orbits and stuff like that, which is very unique. And they asked ChatGPT or I don't know what other AI about to give them code about such thing, and they were very stressed that ChatGPT actually gave their own functions that were taken from GitHub, which was obviously scrapped, inhaled by the AI into. So it is indeed very important to very carefully assess AI. But going a little bit back, I think that now there is a huge cost of people, offices like branches, bank branches, or offices, branches, people, and paperwork in the financial industry. It's a huge cost, and obviously technology can significantly lower this cost. And companies like Paysera, we don't have an office option, so we are forced to have all our processes digitally. And I think this kind of innovation gives us an advantage into better serving customers that are more digital, like the new generation, but also is lowering our cost. And cost is a concern, maybe not for corporate clients or not for, but for a lot of people, cost is indeed a concern. And it also works well for the whole environment. So when you have disruptors, then all the environment is forced or has an additional stimulus to follow, to take on to these innovations and provide them to their existing audience of, let's say, more classic products or services. So I think that fintech companies are good for the whole environment, and they are providing the stimulus for the whole industry to move forward.
Thank you very much, Philip, for this relevant input. Please, Didier, you ask a very good question. Please try to answer a bit. Thank you.
So if I put myself again from the perspective of a fintech company, I think we can see fintech platform as basically delivery mechanisms for products and services. And I think, this is being possible because of the development of the technology. Now, as a fintech player, you have customers. As long as you understand your customers, you can deliver very fast products and services. That can be done via collaboration. For example, Diderik was mentioning the specialist, in developing savings product. I can imagine, fintech companies collaborating with different, let's say, specialist providers, whether this is, investment funds, savings products, insurance, for example, is another one. So I think collaboration can drive, everybody's interests in the market. I think also that means also, developing technology that allows connectivity between, different services. And also I think what can drive the market is education and information, because I think that the fintech platforms are very well positioned to engage their customers in a very different way. I mean, I receive from my bank emails once in a while with this or that product, phone calls when I can't pick up the phone, and these type of things. I think, mobile-based applications of fintech have the possibility to interact in a very, very different way and very rapidly with their clients. And we discussed before about, AI. I believe very much into AI at some point to be able to provide very relevant products for the customer. Because in the end, it's all about the customer. So that was it.
Super, thank you very much, Didier. Diderik, please.
Yes, I will look a bit more, reflect also a bit on what the previous speakers have said. But what we see is that notably these new entrants or new fintechs are basically cherry picking and usually looking at one single product or proposition only. And when we look at more at the traditional banks and savings banks, notably, we still try to take our responsibility and offer the full portfolio of products to our customers, which means lending and saving, but also payments. And mind you, we also provide cash services to our clients. And the reason why I want to make that point here is that also cash is not something we like, let's be honest about that, but we take a responsibility. Mind you, there are 13 million adult citizens in the EU that don't have a bank account, which is 4% of the population, and I'm pretty sure in the CE, that's for the EU as a whole. I assume for the CE region that percentage is much higher. And the only way those people can participate in the economy is by using cash. On top of that, there are a lot of people who even are not able to use digital services. So also they have to rely on cash. And not everybody can afford a smartphone or a mobile connection to use fancy fintechs and apps. So also here banks differ, I would say, from other companies to offer the full portfolio of products, stay close to the consumers, and make sure everybody can participate in the economy, leaving no one behind. Having said that, indeed, we heard also about who owns the customer, who owns the data. I think sometimes when I ask some of our members, asking what do you know about your customers, he would say, no, I know everything about my customers. So congratulations with that. And are you able to leverage that? No, unfortunately, we don't in a position to use that data to our advantage. So I can see there possible partnerships of exchanging maybe some of the data for maybe some insights on the data or just against the hard cash. Because one of the threats we possibly as banks seen probably notably in the field of payments. There are big tech companies out there, most of them not based here in Europe, who could be very easily enter into the payment space and start offering payments to merchants for free even. Not because they are interested in the payments business as such, but because their business model is built on leveraging the data they come along with it, based on which way they can sell advertisements and what have you. Which is a big threat to us as banks, because we can only make money out of payments by charging for it. The threat of a big tech entering in payments, offering it for free, is bigger than the opportunity for banks to become a big tech and being able to leverage the data. So we have to find some common ground in there and partner with those partners that want to partner again against fair sharing of value and risk, and to base on mutual benefits to make sure that that's taking place. And for the sake of time, I will stop here. I can talk for hours, but I think Alexander also has his fair share of airtime.
Thank you very much. We still have 5 more minutes. Alex, please answering my question or the very good questions asked by my colleagues, please.
Our stakeholders are the customers anyway, so I will resume to that. So talking about owning customer and data, we really noticed that this young generation hates being owned. I don't think it's good owning their data or owning the customer. I think so what we are trying to do, we try to empower them, giving them the data where they need, when they need, to use how they want to use it. When we try to hide behind the wall saying that we know best for you, we can protect you best, that works for my age, I think, or even higher, but it doesn't work for the young generation, where they want to decide. And now there are a lot of businesses started by young generation, and they are really vocal in saying, okay, give me the data, I know what I have to do with it. So PSD2 and Account Information Services is doing that, is letting them access the data where they need it. And I think that's a good vector for growth for everyone. Payments as well. In terms of payments, they can now do payments in their application where they use, not in the bank, in the retail store. And now there are, currently we do have QR payments being available as well, bulk payments. So for us and for our stakeholders, I think that the growth is to innovate and deliver their services and their data when they request it and where they request it. Thank you.
Thank you very much, Alex. Very, very good points, complementarities, very good questions. Please allow me to add one more question. Who's accountable about the customer? Who's in charge of the customer? Please think about this. Connecting all the points here, I'm inviting you all to act as honest brokers, to act as translators further on, because there are a lot of things to be done, but of course the perspectives are different as well. But I think all of us are here to contribute and to move on in a sustainable manner. Thank you very much for all your contributions. I'm inviting the people from the room to ask questions after the panel, because the human watch is saying that the time is over. Thank you very much.